Hello and welcome to today's trading session where we're looking to trade the US Open fully live and interactive. My name is Tim and I'm one of the traders here at the Live Trade Room. Just before we begin, we'll basically prepare everything we need to do in order to be able to engage with these financial markets, focus on some of the fundamental drivers behind these markets, look for those technical opportunities, assess the sentiment, and look to engage with a high degree of knowledge and understanding behind these moves and what we're likely to expect off the back of them. If you yourself are genuinely interested in learning how to trade these financial markets, we can certainly help you as an organization. If you go to our website, thelivetraderoom.com, we've got a wealth of, I suppose, very practical range of products and services available to you depending on your time availability, whether you actually have more time to trade during the day or whether you can only trade on a part-time basis. We do cater for all sorts of traders, so and we offer these products and services for very, very low monthly fees. So if that works for you, then do feel free to go. You can go to our website, the chat function there. If you have any questions about anything we do offer, then do feel free to post. Do give us a thumbs up on this video, subscribe to our channel, and if we'll be in the coming weeks now, we'll be posting lots of content for you, so you can be notified of that. Plus, you'll be notified, of course, when we do go live. Okay, so let's get straight into it then. So over the next hour or so, what you can expect from this webinar is a real-time sort of preparation for the US across some of the world's largest markets, from your foreign exchange to commodities and also global indices. So we'll be looking at gold and oil indices like the S&P, the Nasdaq, the FTSE, the DAX, the Japanese Nikkei. So we do adopt a multi-asset class view of these markets, and that's really important. We do appreciate many of you do just focus on foreign exchange, and that's very good from an entry level basis. It's just a lot cheaper to trade, so we understand that. But if you can understand what's going on on a multi-asset basis, then it really does I suppose give you a little bit more confidence in some of your trading decision making. So that's what we can help you with. So let's get straight into it then. We'll start with a risk warning. Please see our risk warning currently up on the screen. And while you're taking an opportunity to have a look through that, I shall bring up FOREX Factory. So we do want to be mindful of some of the major news events that are likely to impact some of our trading decision making. Just a little step back really, we've had some important news events for these markets. Jerome Powell, also Janet Yellen, both testifying over 2 days, and that closed out yesterday, and we'll be having a look at what impact that has had on some of your equity markets as well. So we can what we're dealing with now is kind of the aftermath, the markets just digesting some of that information and seeing how they plan to proceed. We saw an interesting crude oil inventories number, very close to being in line with expectations, as opposed to, I suppose, what we saw 2 and 3 weeks ago, which was just explosive inventories, largely due to restrictions with supply with certain parts of the US with their weather conditions, really impacted the supply of crude oil. So we're in the realms of sort of normal inventories. Is there a stockpiling just because we have these economies going back online, including states in the certain states in the US? They're beginning to come back online, but we're not really seeing that play out just yet through something like the inventory number. So we'll take that into consideration. So over the course of today, we've had the S&P with their monetary policy statement. Now they've been in negative rates for quite some time, and you can see they kept rates at minus 0.5. Let's see how far back I can go with this. Okay, right, can't go back very far, to be fair, so that's okay. So the Swiss National Bank have one of the, I suppose, most accommodative interest rates in terms of being in negative rates for quite some time. We've had the press conference earlier this morning. We do have a number of central bankers this week, and the markets are sort of watching carefully, and we're seeing the S&P continue to kind of grind lower despite these central bankers. So trying to sort of, I suppose, try to ease fears, perhaps. That's probably the best way to put it. Now today, we also, for the afternoon, what we can be focusing on is the EU Economic Summit. We'll see that there's 2 days of EU talks.
To the bottom of the hour, we get the weekly US initial jobless claims. We're looking for it to move down to 730,000 on a prior 770,000. The range 700 to 780,000. Continuing jobless claims, we're looking for 4.043 million on a prior 4.124 million. The range 4 million to 4.896 million. Finally, for Q4, we get the GDP final reads. We're looking for it to stay unchanged with the prelim at 4.1%. With the GDP deflator expected to stay unchanged at 2%. Core PCE prices final as well expected to remain unchanged at 1.4%, with PCE prices expected to come in at 1.5% on a prelim of 1.6%.
Okay, that's our squawk, so we just get live updates. So we've got some news events impacting the US dollar in the next 10 minutes, so we'll prepare for that. This is the previous quarter, so towards the end of last year, 4.1%, which is a you can see the massive hit the US economy took over the course of 2 quarters last year, followed by the very significant bounce back, and now we're sort of in the realms of kind of normal GDP growth over the quarter. So the optimism exists really with these economies coming back online that it's likely to add to this growth outlook, with inflation in the pipeline. The Fed have maintained on numerous occasions that they're not too concerned. They expect inflation to be transitory, meaning that it'll go up and down, and if it goes beyond certain levels, there's certain policies that the Fed can pursue to bring it back in line. So we're just looking at the S&P 500, and it doesn't seem to be taking any notice just yet. So that's really what's important, is how the markets react to these news events, of course. And we don't need to really discuss tomorrow just yet, but so we'll have a look and we'll prepare for this news event GDP figure, which will be due out in 10 minutes. So let's get the charts up then, and we'll see what opportunities we have. So I'll bring this. So these were some of the opportunities we were looking at yesterday, and we've been making steady progress, I guess, in this direction. So we were looking for a breakout sell trade below the 1818 level. We're sort of marginally below that. You can see that the bias is to the downside. You can see we go through long periods of sideways moving price action, followed by that next move to the downside. And you see, we're technical traders, so we want to be able to identify how these markets are behaving, because what's happened recently is likely to indicate what's likely to happen. Unless something significant changes. So our bias is very much to the downside, where it should be, and we want to see some continuation to the downside. That's obviously what we're working for. So we're below that 1818 with further downside potential there. So we can continue to really monitor these markets even further. The pound, we've been in this kind of sideways range now for quite some time, as you can see. We're struggling to break above that level, and we're struggling to break these levels to the downside. So we're firmly in consolidation, and we're smack bang in the middle of the highs and the lows. So what we're looking for is that next leg to the downside, so we can continue to monitor this trade. We were looking for this market to break out below the 36.96 level. So we're that was the breakout yesterday. As you can see, we've pretty much drifted sideways. No, sorry, that's the early hours of this morning. So we're kind of slowly getting there, but nothing of any major excitement just yet. So we'll have a look at these in a little bit more detail, especially the euro dollar with this GDP figure coming out, and the S&P as well. The Aussie dollar's in the same boat, as you can see, sideways moving price action, which basically means unless we've got a reason to get out of it, we can stay relatively calm over the situation. New Zealand, same situation of bias, prices coming from top left to bottom right, so we're in this little bear trend, and we just anticipate prices to continue lower from here, but we'll see if that's the case. That's what we want to see happen, and every time prices push higher, they get met with some significant resistance. So we're getting a bit of a retracement price action in the pound yen, so a little bit of mild pound strength against the yen, so we didn't really get that little follow through opportunity lower. And for the big one, the S&P 500, look at the level that this price has just bounced off. The 50 period moving average is the 38.74, and today's low is the 38.74. So that's why we look for these levels of support and resistance, because they're likely to provide support, and if prices break through that level, we could expect further continuation. We're currently seeing a structural failure to the downside. That's what this move here represents. We're just running into a bit of support at those slightly lower levels. Okay, so we'll have a look at the S&P now in just a moment. We've got this news event coming out in just a few minutes. What we'll do is we'll prepare for these moves just to see how the S&P, how the S&P and the euro dollar both behave now with this GDP figure due out. So we're certainly getting a bit of selling coming into this trade in the build-up to this news event. But is this sell the rumor, buy the news type of trade? That's what we're thinking about now at this stage. Okay, well, we continue to monitor this.
So just under 3 minutes now until we get the weekly initial jobless claims. We're looking for it to tick down to 730,000. With the continuing jobless claims, we're looking for 4.043 million. For the GDP final read for Q4, expecting it to come in unchanged with the prelim at 4.1%, and the GDP deflator final expected to be unchanged at 2%, and core PCE prices final expected to be unchanged as well from the prelim at 1.4%.
And this is the thing about these news events. We're looking for deviation. So if we get in 4.1, that's already been built into current prices. So let's say we got a 4.6, for example, that will be a strong deviation off this number, and then we're likely to see markets reacting accordingly. So we'll just have to look for the deviation. That's really what we're looking at. Markets are a discounting mechanism, so they're always looking for, traders and investors look to estimate and preempt what GDP is likely to be. As a result, they will buy and sell the dollar and dollar-denominated assets as a result, depending on performance of the economy. So we'll, and this is a very crude indicator of the strength and relative weakness of the economy. So we shall see in that. The figures are a little bit distorted with the collapse and then the very significant bounce back. So they are quite distorted. We'll find out what the GDP figure for the US over the course of the year actually is, but I think there's lots of mitigating factors associated with it. So I'll come back to that. I'll just look at this just off screen just for a moment. We'll hear the figures come through the squawk as well in just a moment. So we're beginning to see a lot of these dollar pairs looking to strengthen in favor of the dollar across a number of these. So we're looking at these. Let's have a look at a slightly smaller time frame. Same with the S&P. We're looking at the 5-minute chart. So there's lots of up and down. So it's really a market where we're looking to continue to be patient with. I'll just mark these little momentum lows.
10 seconds.
And we'll see. So we'll keep an eye on.
Still waiting on the US numbers.
The euro dollar.
GDP coming in though, annualized 4.3%, stronger than the prelim.
4.3, okay.
$684,000 for the initial jobless claims. US weekly jobless claims 684,000 last week. The continuing claims 3.87 million. Just going back there with the revisions. Initial jobless claims coming in at 684,000, prior revised 781 from 770. Continuing claims 3.87 million, prior revised 4.134 million from 4.124 million. Moving to GDP, final read Q4 coming in stronger than the prelim, 4.3% with a deflator final at 1.9%. Core PCE prices final at 1.3%. PCE prices final at 1.5%.
Okay, so that's quite good for the US economy. So GDP actually performed better than expected. So you would think that that's good for the US economy. It's just whether this type of strength or this type of figure would be enough to support asset prices like your equity markets. You can see that the dollar just ran into that level of support. And it'll be interesting now to see how these markets react to that news event over the course of the next sort of 10-15 minutes. So what we'll do is we'll bring these two back just in line so we can keep a close eye on the rest of the market. So a little bit of short-term buying. Nothing of any major excitement, and it'd be interesting to see what happens to the dollar. I mean, largely a little bit of indecision, really. Nothing. Moving 2 points in the S&P doesn't fill you with much confidence. A market that we should really have a look at is crude oil. So I'll just put this in here. So we spoke yesterday about, well, 3-day price action was very bearish, crude oil. Then yesterday we saw the retracement off the back of that the situation with the Suez Canal and the blocked cargo ship really holding up hundreds and hundreds of other cargo ships. So there's a problem that they need to resolve pretty quickly. But yesterday was quite supportive of crude oil prices, and today now there's a little bit of selling. So we were very interested to see. We weren't really that interested in jumping into it because it's unknown to how long this will be the problem. They're now anticipating it'll take a few more days, well into the weekend, to clear it. So we shall see if that's the case. I suppose the response from the dollar has been fairly muted.
The PBOC here reiterating the need to keep prudent monetary policy flexible.
Okay, it's interesting to see the euro dollar actually extend lower. So there's your sell trade below. We can just amend this. Before the 1800. So there's a sell trade right now in the euro dollar. Close to that for the New Zealand. It looks like it's extending This level's lower, so we're in this sideways moving pattern. Let's bring this level down. Let's bring this level up. So really we're up and down inside this little range. So a break below that low would be actually a decent selling opportunity. So you want to see support and resistance create a series of yeah, so you want to see multiple touches of levels of support resistance to the upside and to the downside, and what we generally look to do is to trade the breakout of those levels. So we can keep an eye on that level just in there. So it's the 69.50 now. So 75.80. Pound is kind of in a similar boat. It's below the 36.69. Let's put this in. $36.69 the other way around. So these are our trades. The euro dollar below the 1800, and we're just bouncing off that level as we speak. The pound dollar below the 36.69.
Exchange rate generally stable.
The Aussie dollar below the 75.80 level, and the New Zealand dollar further downside potential below the 69.50 level. We keep an eye on the S&P 500, and crude oil is squeezing lower, so not really that surprised to see that type of indecision in this market. So tomorrow, will we sort of bounce higher, and will it continue this fashion? It looks like that way so far, so maybe a breakout of those levels might be marginally a better opportunity. We're seeing the S&P 500. So when we see moves like this, we are really talking about just want to see where the 50 period moving average is. So we're at that level, or we're just below it. So there is a decent sell trade here for us. Okay, so the dollar's strengthening, and we're seeing the equity markets roll over even further. Crude oil is pushing lower, the Nasdaq's pushing lower, the Dow Jones is pushing lower. Big move to the downside for the S&P, the DAX. Not quite with the Nikkei just yet, but we're down to the 50,000 level for Bitcoin. And any retail traders that are trading this market with leverage, it's worth just commenting on, that are looking to hold these sorts of trades. You know, they're offside to a huge extent. And will you have the capital to take that level of pain? Very few traders will. So the vast majority of traders are just burning capital. So if you can imagine anyone buying, let's say at the 60,000 level, and you are prices are now down at the 50,000 level, you know, you're talking about a 15 to sort of 18% move off the highs, and that compounded with leverage, you know, it makes it really unbearable for a lot of retail traders. And we're seeing really big swings in all sorts of so-called retail trading markets. What's happening to the vast majority of those people is they're getting burned by very, very significant swings high and low. So for that reason, we don't trade Bitcoin. It's too speculative. It's a bit too much. Now we've got a nice strong flush to the downside, as you can see. So we're getting that accelerated move. We're already in the euro dollar to the downside. So these trades are turning good. So we'll just have a quick look at this trade. So we are below this important level. So what we can do is we can mark this, and if prices squeeze below the 38.71, which is very likely to be the case, we just needed to be really quite patient with that trade. So we've got, and again, we continue to look for these opportunities where prices drift sideways. So we get a consolidation, which is not a bad thing. And then we need to see two things. We need to see prices break below the important level, and then we want to see the follow through. So we want to see the commitment from others to drive prices lower at this point. And if that's the case, we will gladly get into this trade as well. Just looking for a stop loss placement. This is way too high. The 39.04 with an entry of something like 38.70. You're talking about 30. Mind you, it would represent, it'd be a 40-point stop loss, but we are below the 40 period, the 50 period moving average. So might still stack up for us. So we've got the accelerated move, and now we're just getting quite a strong pullback on this. So what it means is we can be a little bit patient. Okay, so we're getting a little bit of a bounce back, so we can continue to monitor that trade. So here are our opportunities. The euro dollar to the downside below that 1800, so we're getting that move now. We're already in these trades. We're already in the Aussie dollar to the downside, the euro to the downside, the pound to the downside, and New Zealand to the downside. So let me tidy this up quickly. Crude oil is just continuing to sell off. We're running into support down at these lows. $60. So you can see the details there up on screen for each of these trading opportunities. So they're very viable trading opportunities. We're getting close to that break, the 85.80. We'll just look at the New Zealand on just an hourly time frame. below 38.71. 38.71. Sorry, I'll have to so we might be close to getting into a few of these trades. So those are the markets we're looking at currently up on screen. Got the euro dollar to the downside, below that 18.18 level. We're already in it. Prices are just breaking lower, so a really good opportunity to sell the euro dollar there. A little bit of patience perhaps required for the pound dollar. We do like it below the 36.69, but we're sort of 30 pips away from that move just yet. There's an opportunity as well in the Aussie dollar below the 75.80. We're just above that level as things stand. So if you get a flush lower, there's a decent high probability sell trade there for you as well. New Zealand dollar. We're looking for this market actually below this level in here, the 69.50, and we're very close to potentially adding the S&P 500 below the 38.71. $38.71.
Seen commented from the UK PM Johnson to hold a press conference on Monday, March 29th, and says the UK pandemic unlocking roadmap remains on course, according to his spokesman. And just a heads up, we're just under 4 minutes until we hear from the South African Central Bank. Reminder, they usually lead with the press conference first in the presser, and then follow on around 15 to 20 minutes later with the actual rate decision.
Okay, so the trade that we're basically waiting for. Sorry, I was just confirming a few things there. So what we're waiting for really is the S&P 500 to actually roll below, because if we look at this on the daily time frames, and I'm looking at some of the others, we could be close to getting some moves on those. But the S&P, all the other equity markets are squeezing lower, as you can see. So there's probably decent trades in most of those. We've just broken to the downside, and now we're going to see if there's an opportunity for some continuation to the downside. So here's your consolidation for 2-3 hours, drifting sideways. This is the market that actually closed to the downside, and what we're waiting for is the follow through of that trade. So we didn't get it in the next candlestick, and we're still sort of waiting for that move to actually break lower, and then we can have a stop loss, something like this, placed there. There's your entry price to the downside, and that would be a viable selling opportunity if we get continuation. Sometimes we don't, so we'll continue to monitor that one.
Sometimes the reflection is far more present than the thing being reflected.
South Africa, they're seeing CPI averaging 4.3% in 2021. That's a 0.3% hike from the prior estimate. Sees inflation averaging 4.4% in 2022. However, this year they see inflation expectations in Q1 falling back to 3.9%. So that's the South African Central Bank there, moving their overall 2021 CPI forecast to 4.3% from a prior estimate of 4%. They raised their 2021 GDP growth forecast to 3.8% from 3.6%.
We're getting a bit of a pullback off the lows. This is exactly the reason why just getting the close below the level is not enough. We need to see the follow through. So it can mean that we need to be a little bit more patient to see the follow through, but it means we don't commit to a trade, and on occasion you might end up getting in at a slightly lower price.
South Africa's central bank there saying that risk to domestic growth outlook assessed to be balanced.
But that in itself is the better of two evils. I'll just turn the squawk off for just a second. So we're seeing a bit of dollar weakness, very, very mild, begin to creep in. We're still close to these little breakout levels. For the S&P 500, so it might just be a case of just being a little bit patient today. We saw a little bit of our moves as the day unfolded yesterday, so the same might happen again today. The S&P is looking very, very bearish. The equity markets are bearish. It's very supportive of our dollar strength trade, which is why we're in the euro dollar, the Aussie dollar, the New Zealand dollar, the pound dollar, and we're looking to add the S&P if it works with us, if it conforms to our expectations. Which it very well may not do, of course. Of course, if there's any questions, feel free to post them online. Through the chat function there on YouTube. Just watching the dollar, we've had a bit of a snapback. We can be really quite patient with this dollar trade purely because we've been drifting sideways for quite some time, and every time prices do attempt to drive higher, they get hit with a little bit of further selling across these markets. So if we know that that's the behavior, then we can, or the analysis, then we can be a little bit patient with them and don't necessarily need to be getting too excited about them pushing higher, unless something significant changes, of course, and that's what we're keeping an eye out for. just have a look at this now. Just seeing the sideways moving pattern. Let's see if we get prices actually breaking lower. It looks like we might do very, very shortly. So we can pull the trigger below that. So we very nearly got it, very close to actually getting into the S&P 500, just below that 3870 level or 3871 level. Let's see if we still get that flush through. We've got a deal ticket open, so okay, so right, so we're ready to get into that S&P 500 sell trade. If we just get that follow through, I'm not really seeing it just yet. Okay, so we might have to call it a day there. We're seeing a little bit of dollar weakness just begin to creep in. Nothing major. You'd want to see these little structures start to fail and start rolling lower for some continuation. So we'll keep an eye on the price action, and if there's reasons to get out of these trades and book in profit, of course we will do. Nothing significant has changed just yet, and in actual fact we're looking to add to this risk off kind of market condition that we're currently experiencing with a sell trade in the S&P 500 if prices break lower. So we do apologize. We've got additional trading sessions now with our members, so we'll log off there. It's a little bit of patience really is needed with some of these markets, so that's the prevailing winds really, so bear that in mind, and we still expect further dollar strength and further equity weakness. So that's really the trade idea to a certain extent. Okay, so look, on that note, I'll let you guys go. Thank you very much for joining us as always. We run these free webinars, these live trading rooms, Monday to Thursday. So we don't have the session tomorrow, but we will be back again next Monday from 12 o'clock onwards. So we hope you can join us for that. If you found the content useful, do give us a thumbs up, do subscribe to our channel, and if you do have any further questions about learning how to trade these markets, then you can do so through our website, thelivetraderoom.com. So from everyone here, thanks for joining us, take care, and we'll speak to you soon. Bye for now.